Michael here with Varma Realty Group and Coldwell Banker, and today I want to talk to you about rental property and why rental property is the greatest investment that you can make. We're going to hit 4 points that we call the 4 wealth generators of rental property. So like I said, we're going to talk about the 4 wealth generators of rental property and why these create what I think is truly the best investment that you can make. Wealth generator number 1 is going to be cash flow. Wealth generator number 2 is loan pay down. Wealth generator number 3 is appreciation. And the 4th wealth generator is tax savings or tax benefits that you get from owning rental property. So I'm going to go through all 4 of these and kind of show how a typical rental property would look and what the return on investment would be for that. So first we're going to go through a quick sample deal and talk about the cash flow of the property. So on this deal, very simple, purchase price of $275,000, putting 25% down and closing cost of $5,000. Your total investment is going to be $73,750. So again, these are kind of what a typical deal would look like, a standard deal, nothing crazy high. But the gross income on this particular deal, $26,400, and let's just say that the expenses on the deal are $20,500, which would give you an annual cash flow of $5,900, which brings you to a cash-on-cash return of 8%. Now 8% is a pretty standard cash-on-cash return. A lot of investors look for more, especially in the Cincinnati market, but 8% is extremely achievable. So now on this exact same deal, we're going to talk about the loan pay down from the same year. So again, your loan amount on this deal is going to start at $206,250. That's the purchase price minus your original down payment. And at the end of year 1, your loan is now down to $202,000, which gives you a loan pay down of about $3,600. Next wealth generator is appreciation. So appreciation every single year that you're owning this property, not only are you paying the loan down and getting cash flow, this property is actually going to be going up in value. So very conservatively, I am going to put property appreciation at 2%. Now, anyone who's been in the real estate market the last couple of years is well aware that we're significantly higher than that, but just to be conservative, let's just pretend like every property goes up in value 2% annually. So in this particular deal, that's going to give you an additional $5,500 in equity at the end of the year. Now, the 4th wealth generator, the one that's maybe not so much known about, but is definitely talked about within the real estate industry, are the tax benefits that you receive from holding rental property. Now, I'm going to go through 2 scenarios here. One is going to be a alternative investment that is not real estate, a cash flowing investment. This could be a dividend stock, or it could be a business that you own, anything that spits off cash flow similar to real estate. So again, this is going to be the traditional cash flowing investment. Your cash flow, again, $5,900 as we talked about in the original. So kind of comparing apples to apples, you're getting that 8% return, $5,900 of cash flow. That's going to give you a taxable net income of $5,900, assuming that you're at a capital gains rate of 15% because you make $100,000 a year. That's actually going to bring your net return down to just over $5,000 compared to the $5,900 of original cash flow. Now, in real estate, if you have that $5,900 of cash flow on a $275,000 property, you get to do what we call depreciation. Now, depreciation in the typical sense is, hey, I bought an asset and every year it's going down in value. So per the IRS, I get to write that value that's going down off and take a tax deduction for that. Now, we're allowed to do this on rental property, even though we know that the property is actually going up in value. We're allowed to deduct that depreciation. And kind of the standard depreciation is the value of the property. You get to take that and depreciate it over a 27.5-year lifetime. And so on a $275,000 property, you're going to depreciate that $10,000 a year. So you get a $10,000 paper loss just for owning the property. Now, there's a little bit of nuance with what the land is and what the actual property is worth, but just for simplicity, we're just going to say $10,000 is what you depreciate. And so on that $5,900 of annual cash flow that you're making $5,900. On paper, you're actually going to have a net loss of $4,100. Now, that $4,100 loss now can be taken as a write-off against some of your other income. So again, assuming that you make $100,000 of income, you're actually going to be saving an additional $984 on your federal taxes. So that doesn't even include what your state taxes and everything else would be. So yeah, again, just for simplicity's sake, $984 of additional tax benefits. So in conclusion, we're going to go down the list again just to kind of summarize here. 4 wealth generators of real estate on this particular deal. 1, you're going to have your cash flow, $5,900 a year. Next, you're going to have your loan pay down, $3,600 a year. Your appreciation at 2% is going to be an additional $5,500 a year. And then finally, your federal tax savings of $984. So that brings you to a total return of $16,000, which is just over a 21.5% return. Again, most people are looking at rental property and they see 8% cash on cash return. That really doesn't paint the entire picture. So these 4 wealth generators are why you should get into real estate.